Hi everyone, just thought I'd do a very quick recording and talk to you about exactly what they're talking about in the press right now about industry funds not having cash or needing a bailout. Effectively, when a super fund invests your money, particularly an industry fund, they will invest in a range of different assets depending on how much risk you want to take. But some of those assets are what's called unlisted. The best way of saying it, it's not easily to measure the constant valuation of that asset. So it's like buying a fixed asset that is not listed on a stock exchange or can't be regularly updated. If you want to think about it being commercial property as an example. And so what they're doing right now, there's a huge run on redemptions and people moving to cash inside their portfolios, which of course is their choice. But what happens is that they can't sell those assets quickly. They can't fire sale them. They can't sell part of them. They can't sell the car park. They can't sell 3 levels of it. And if they do, it's somewhat 6 to 8 week process is a minimum to get that out. So what they're having to do is liquidate their other cash or liquidable assets, being shares or those for bonds and so forth. So what that's going to mean is that when they start to revalue those assets, which may not have been done for 6 months, 12 months maybe, those are going to be passed on to investors with investment returns looking far significantly worse than they would have normally. And reality is that then selling assets, whilst the market has had a significant correction, they're having to liquidate assets which they'd prefer to probably maintain. So what does that mean to you? It means a few things. Firstly, understand where your super money is invested, how much risk you're willing to take, and where it's invested right now. Should you move to cash or should you stay where you're invested? Seek professional advice. Second thing would be, are those super funds going to see a significant run of redemptions or moving into cash? There's now the people now have the ability to redeem up to 20 grand out of their super fund. So if you're in a fund like Host Plus or CBUS, which are aligned to industries that have had a lot of layoffs, you could lead to a conclusion that they're likely to see a huge run of redemptions on their funds, and therefore continue to exacerbate the issue being that they don't have the funds to liquidate. So the third thing is they're asking for a bailout or cash from the government all of a sudden to make sure that they can pay out these redemptions rather than sell the assets. So what that means is that your investment returns are going to look significantly worse than they would have normally. There's a strong likelihood. And as the years go forward, it's likely to still play out. So the years of seeing compare the pair ads, you'll probably never see another one of them. They are no longer, they are extinct, just like the dinosaurs. They're extinct. And more importantly, it's better time than ever to consider all the strategies around those super withdrawals, contributions, first home buyers, grants, and look at your super fund as an asset that you own. It will be more than likely your largest assets outside your family home when you get to retirement.